Hey guys, Jason here for ChartGuys. ChartGuys is a community of technical analysts. We share setups, we talk about charts, and I'm going to go through a few of the trades that were shared in the room today. And generally, these are members who call out different signals and different aspects of technical analysis that we use to piece together our own trade setup. So no one's telling anyone to buy or sell anything. We don't really share that sort of information. It's more, here are some conditions, and you do with it what you will. So in this case, on the 2-minute time frame, I was watching CGC, and someone had posted, is this a 2-minute volume climax? And I had been watching the chart casually at that point, and then I just looked over here and I saw that there was this 2-minute climax, monster volume, a reversal candlestick. We saw a little bit of a dip, and then we saw some bull volume coming in with a second candlestick to follow, and then a little bit of hesitation on the part of the bulls, establishing a higher low on the 2-minute time frame. So right out of the gate, I'm interested in this trade. So far, we're in a very much a daily, or well, we are in a daily downtrend, but a 2-minute downtrend on CGC, and there's just nothing but bearish pressure here. So what I'm interested in, and why the 2-minute volume climax is important, is because volume itself can act as an indicator of trend reversal. So if you hit that level and so many more shares are traded back and forth, essentially the bears who have been in control deplete their reserves, they've got nothing left, no further to push, and in this case the bulls can turn things around. So it's all of that regular transaction plus a little bit extra that tires out those bears, and then we see bulls follow through. So that was a nice setup. There was a couple different people who took advantage of that one. There was one trader who had recognized the volume climax, waited for the pullback on the 2-minute time frame, and then walked up their stops up until the loss of the 2-minute trend up here somewhere. Chart girl Dinsey, who is one of our team members, was using the oversold hourly time frame and got in at 1830, somewhere over here, I believe, looking for more downside continuation before that that elastic rebound on the hourly time frame, and then she used a 5 EMA to walk up her stop and finally took profits. I don't recall exactly where she was. I'm just looking through her charts now. 1831 to 1888 was her trade. Excellent work all around, and a really impressive response and recognition of a 2-minute volume climax into a nice reversal. Another trade that was a really good opportunity was CTST, another marijuana ticker, an overall downtrend. And someone just posted great volume coming in, and I just jumped over to the chart. 5-minute time frame, we were already on the second candlestick, and the volume was really notable. The distance the ticker had moved was notable, and everything about this screamed pop and fade into EQ. And that's pretty much what happened. So we hit 115, we pulled back, and I was scouting for that area of equilibrium to jump in for a quick trade as that elastic rebound took place. So I was watching the 2-minute time frame primarily, and to ignore my drawing, I'll explain that in a little bit. But we hit 115. We were overbought massively. Our RSI on the 2-minute time frame was 93.94, 5-minute overbought, above 70, and we're looking for pullback at that point. We just simply can't sustain that level. 2-minute time frame, we get a bearish engulfing candlestick, and then we drop down. So I'm watching the 1-minute time frame here, possibly even the 15-second time frame, and I'm looking for some hesitation. So we hit 102. Let's go check the 15-second time frame to see if there was any better recognition of that level there. Yes, indeed we were, because that's what I must have drawn this guy. Here's that double bottom, and then we start to see a little bit of green. So right away, I think it was 104, 105, I placed my entry, and I was just looking for us to hold this level and stop exactly on the other side of 101, or on the other side of 102. I believe my stop loss was 101, and I wasn't going to take any chances with this. I was going to risk 4 cents per share to make this trade, and I almost got out, but that's why we have stop losses. We let the market decide what's going to happen, and the reason I almost got out is because we basically just started going sideways, and then nothing much was happening, and I was going to move on to greener pastures. Luckily, bulls managed to step in, and we went all the way to 114. I took my profits early, and I'm glad I did, because we just sort of went sideways. And the trade itself was good. We'll talk about that. 115, overbought, pullback, expecting an equilibrium, looking for a 15-second strength, and then we got that, and we took our exit expecting a lower high under 115. Where this weird guy comes in is the fact that we just traded sideways for quite a long time, and nothing was happening. There was a big wall above 114. There was bid support at 113, and the drawing here, someone said, what's going on? Is this a cup and handle? And I said, I don't think it is. It's basically just someone propping the price up, and as soon as that person bails, the price is going to drop, or there's going to be so much demand that we take out 114 and we just keep going up. So this guy here watching this price, holding it up, he eventually just gave up. The price collapsed to 106 and then eventually closed the day out looking very similar. Well, it dropped to 103. So good trade on CTST. Again, overbought pullback into EQ, expecting a equilibrium with a lower high as your exit. So that was a good trade and excellent drawing, if I don't say so myself. Hey guys, we're going to look at SDC now. This one was shared to me by ChartGuys member called by the name of Donuts. And Donuts said, hey, you like CTST, that weird range-bound action you're seeing there? Check out this short opportunity on SDC. So I zoom in and I see this beautiful descending triangle, this massive amount of support just being hammered over and over again. 998 was established as a support, and then we see 999, and eventually $10 psychological comes into play. And just over and over and over again, that support is getting tested and tested and tested, and bulls aren't showing any sort of interest in driving the price up. In fact, we just get wedged between our EMA 12 and our support level, and eventually it just buckles. So this was an easy trade in the sense that we had a clearly defined support level, and you could either set your stop losses at 1004 or 1003 and just have ridden this out for the duration of that trade. And if bulls manage to step in, great, you got your stop loss in place for your short. And if you are going short, just take your first sign of strength. I personally would have waited for the loss of 998, a minimum, like a 1 cent risk to add a lot more clarity to your trade. We lose 998 and we just drop straight down to a low. What is our low? 969. So a 30-cent drop in mere minutes on SDC. Just a great short opportunity, and just to show you how powerful these patterns can be and how easy it can be to recognize them and how minimal your risk is with properly placed stop losses. And ultimately, I hope it shows us the value of having other people in a community who know a bear chart when they see one and can recognize and share good setup and good technicals and charts and everything else like that with other people. So if you're interested in learning more about technical analysis and setups like this, or just maybe even just becoming a ChartGuys member, please check out chartguys.com. We would love to have you. We like new friends.